Well, thank you so much for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. My goodness, here we are on a Monday, ready to kick off a new trading week. And you know what? We're getting toward the end of our trading month already. And things kind of turned around over the weekend, and we'll talk about it with a little help from Mr. Brian Hoops, the president of Midwest Market Solutions. He is based in Springfield, Missouri. And Brian, let's take a look at some of these prices here. I want to get your take on what's driving this. We'll start with the corn market, and we did not have any overnight export sales to talk about this morning, so everything quiet there. Of course, we had all the differing news about the Ukrainian port situation, and they had the agreement when we left Friday that said, yeah, they were going to be able to ship a whole bunch of grain out of Ukraine, and then literally within about 20 hours after they signed the agreement, the harbor got bombed, and now nobody knows what to do. So corn over the weekend, we had September corn last night 13.5 higher at 577 3/4, and December 14.5 cents higher this morning at 578 3/4. Now, we do have some changes in the weather models on the intermediate range, I'll call it. 6 to 10 day and 8 to 14 day forecasts have been shifting a little bit, and Tim Ross alluded to that a little bit ago. We'll talk about that in a second. Now, on the soybean trade overnight, we had August 16.5 cents higher at 14.51, September up 14 3/4. Look at November, it was 18 1/4 higher at 13.34, just a couple of cents from its high of the overnight trade. Moving on to the wheat, well, it gained back quite a bit after news of that bombing of the Ukrainian port over the weekend. And September Chicago wheat gained back 23 cents at 7.82 per bushel. In the Kansas City market, you had the September 23 3/4 higher at 8.44, and in Minneapolis wheat, September closed 22 cents higher this morning at 8.93. It actually got as high as 8.99.5, just a couple of ticks from hitting $9 before it backed away a little bit. December cotton was up just 14 points this morning, but above 91 cents at 91.03. Now, let's talk with Brian about this. No overnight export sales, but all kinds of news, and it looks like maybe a change in the weather patterns too. Is that starting to make traders a little bit antsy now?
Yeah, good morning, Marlon. A lot of mornings here. We don't have a lot to talk about coming out of the weekend, but we certainly do this morning. A lot of news coming out here. The wheat market's been the upside leader as we, continue to hear conflicting reports coming out of Ukraine and Russia. The fact that Russia would bomb the Ukraine just hours after signing the deal makes traders nervous about anything being exported out of the Ukraine. But they're slowly trying to move some product. Wheat futures up, leading the market higher overnight, anticipating that we're going to receive the benefits of some export business. Now, it's always hard from a standpoint from wheat to be the leader based off of demand. We just don't have that great of demand for wheat, but this is the time of the year. If we're going to see demand be at the forefront, this is the time of the year to do it while we have freshly harvested wheat products. So it can happen, but if it was a supply rally, you'd have really an explosive rally. I'm afraid this may be more muted. Now, the corn and soybeans are following along, but also I thought the rains over the weekend were kind of a bust. They were some heavy rains in parts of the country, parts of the Midwest, but where they needed it the most across Iowa, really very spotty and very limited in rainfall. Now, the forecasts changed once again, and they will continue to change. And it looks like southern Iowa, parts of Nebraska, and central northern Missouri getting some rain this morning. Best chances that we have for rain this week in many months. Coming this week, 2 to 3 inches possible for some of these plains, but it's just going to be too late for the corn crop as it's already being cut for silage. So there's definitely some benefit out of this change in the forecast. It may serve to cap the rallies, but at least we're higher overnight, and hopefully we can sustain some gains. We closed up near the highs of the night session, which is usually a good sign.
And just to complicate things even further, I just saw a Newswire story just a couple of minutes ago where apparently Russia supposedly has bombed a school and some civilian buildings now in Ukraine to add to the woes that we had from the port over the weekend. Yeah, okay. Well, we're going to take that news and take a pause right here. And Brian, we'll come back and we'll talk about the livestock side. All kinds of reports Friday we'll discuss in a moment. All right, we're back talking with Brian Hoops of Midwest Market Solutions. Now, when we left Friday, we were getting ready for the release of the cattle on feed report, the cattle inventory report, and also the cold storage report. That doesn't happen all that often, but they all came out at 3 p.m. Eastern Time Friday after the close, and the market can't do anything about it until this morning. Let's review, shall we? Let's take a look at the cattle on feed numbers that came out from USDA after the close on Friday. Here you go. The on-feed number was expected to be 99.8%. Boy, they about nailed that. It came in at 100%. Placements were expected to be 94.3%. It came in at 98. That was a little bit of a surprise on the heavy side. Now, the marketings came in at 102% of a year ago, and that was exactly what the trade was looking for. Now, let's look at the inventory report. Janet alluded to this at the start of the show today. Cattle and calves, 98% of a year ago. Cows and the heifers that have calved, they had an inventory 98% of a year ago as well. And the same goes for the heifers over 500 pounds, 98%. The steers, the heavy steers, came in at 99% of a year ago. The calf crop overall, 99% of a year ago. And let's look quickly at the cold storage numbers on the red meat. And we had frozen red meat supplies down 1% from a month ago, or up 24% from a year ago. The beef down 2% from a month ago, but 29% higher than last year at this time. Pork down 1% from a month ago, up 22% from a year ago. Let's bring Brian Hoops back in here. All these numbers that came out from USDA related to the livestock trade, what do you take away from that?
Yeah, there's a lot of things to react to this morning. Of course, we have higher corn prices. That's going to pressure feeders and probably fats this morning as well. But you look at the cattle on feed report numbers, we were expecting to see a real friendly report. The placement numbers came in much higher than expected. Next month, they're going to be even higher. So, yeah, you kind of miss those expectations, especially in the placements on the wrong side of things. So I think we give back some of the gains that we saw late in the last week on the cattle market. We rallied into this report. We're going to give back some of that based off of the report, some of it because of higher corn prices, and the semi-annual cattle inventory report. Longer term, that's very constructive, even though we were over trade expectations. But I think we'll be focused more on the cattle on feed numbers and the higher corn prices for price direction this morning.
Okay, now remember, we finished live cattle higher on Friday. August was up $1.65. October finished at $1.43 even. That was up $2.02. That was as we headed into the report. And don't forget about those feeders. The big run they had Friday, August was up $3.27. It finished at $181.55. It might be hard to hang on to that number. And lean hogs wrapped up Friday with August up $2.40 at $118.70. The deferred contract's not as strong. October was up 55 cents, but we'll see how they interpret all the numbers here this morning and which way they want to go. So place your bets right now. Brian, good information. Thanks for joining us here this morning. Brian Hoops of Midwest Market Solutions. So, Janet, this could be another exciting trading week. We begin at the bottom of the hour.